Hello again, everybody. It's Harry Boxer, the technical trader at TechTrader.com. It's Thursday night, January the 21st. Well, the day in Wall Street today was a follow-through, a run right into resistance at NDX 4200 and 1900 S&P, and then they pulled them back. Now, for those of you who are upset about the way the market closed today, when you consider the move of some 78 points on the S&P and 200 points on the NDX, straight up pretty much, you're going to need to get pullbacks, retests, and consolidations. Before I get into the individual stocks, I want you to take a look at what that looks like. Here's the S&P. Let's look at it on an hourly basis, which I follow closely. If you take a look at the pattern, you'll see a distinct down channel, multiple waves. When we got down here, where I had resistance, I had a target, if you remember, at 1830. We got to 1812, and then exploded off that level. And from that level, we went up to almost 1890 today, not 1900. We got up to just underneath the declining moving averages on the hourly charts and the declining channel top and pulled back. That's actually normal. If you look at the structure, it could be a left shoulder head and maybe a right shoulder forming. And so don't get too upset until we see what happens. On the NDX, it's even more symmetrical. NDX dropped from 4,700 down to under 4,000 and then rallied back from 39.93 to today's high at 4,200. So 207 points. And now a pullback. If you look at where the neckline is on a prior high, and where you look at where the declining tops line and the lateral price resistance at 50-period moving average, not a surprise we pull back. The question is how gentle and how well is it going to do? Well, typically I look at the neckline, the shoulder line, excuse me. That pullback got to 4,085. That's another 60, 55, 60 points. We may get that, we may not. It may make a higher low and then go. But the key is going to be getting through 4,200, and then we're off to the races to 4,275 and 4,375, which at that point is literally not even a 50% retrace. All right, let's see what some of the stocks that we wanted to follow today did. Adtran is a stock I haven't really looked at lately at all, and you can see why. It's had a nasty decline since 2011, taking it from the high 40s all the way down to the mid-teens. Now, this falling wedge broke out recently as it popped, pulled back and tested, and then yesterday morning, smacked down to 1627, only to get up today to 1915. And this breakout with volume, notice the increasing volume the last 3 days and the OBV moving straight up. Something's cooking here, but it looks like a breakout of the base anyway. There's resistance at around 20, which is the major declining tops line going back a long time. Okay, so through that level, and that's what you want to watch, this stock could explode into the 23.5 and then 27 zone, which is what my second and third targets are. 3.3 days to cover. And when we look at some of the oils, well, oil did have a nice couple dollar reversal today, and so did a lot of their stocks, but it's not a surprise because we spiked down in the 26 handle on oil, or 27 handle, whatever it was. You can see that the last time the COP, for example, rolled over hard in August, taking it from 70 down to the low 40s, it then worked its way back in 5 waves and got up to mid-50s, high 50s, only to roll over again in 5 waves, 1, 2, 3, 4, and 5, the 5th wave being a spike down to long-term support. Why is that long-term support? This goes way back in this area here near the shoulder line. But obviously, if we get another major disaster in oil, and even if we do bounce, there's still a possibility that even this one could be 27. But for now, I'm looking at this rebounding and further to 40, 42 zone, and maybe even as high as 44 at this declining tops line. Some other oils we're going to look at. KMI, Kinder Morgan, with a big snapback, breakaway gap, and pop up across the declining tops line, and right at the 10-day moving average before it backed off. Excuse me, 21-day moving average. There is a lateral resistance there as well. So let's just say that if it gets through here, I'm looking for 16.5 and then 18, and then we'll see if it pulls back and retests. But for now, we'll keep an eye on Kinder Morgan as well as one of my favorite oils along with COP. These are mid-range oils. I'm not talking about junior oils. There's plenty of those. Range Resources had a great day today, and we traded it successfully. Look at this long-term decline from the mid-60s down to today's low at 19. Now, it reversed, yesterday's low. It did reverse nicely and then followed through beautifully today. So just from yesterday morning at 19 or thereabout, today it got up to 26.40. Huge move. And there's a declining 50-day and lateral price resistance. What I'd like to see is one of two things. Either it breaks out, pulls back and consolidates, or it backs off here and holds the 23 range, say about here. Consolidates nicely, sets us up at like inverse head and shoulders type, and then blows. The targets then are going to be in the low 30s, mid 30s, high 30s, etc. That's range resources. And on the other side of the coin would be the ultra short oils, which I think are going to, they're going to get hammered. SCO, which has had a run from 75 to 244, today had what I consider a reversal day. And the reason I think that is because the series of rising bottoms over the last 3 weeks or so was broken with good volume today to the downside. If this one gets under 200 tomorrow, you can see it easily drop to 170, or maybe even as low as 155. Now the other one is DWTI, which has just been a monster, but what a move down from yesterday's high at 484, and it got down as low as 362 today. That's 122 points just since yesterday. Incredible. But you can see where there is some support here, and if it does bounce, it may be a short, because I think if it bounces slowly or in a quiet manner on low volume and then starts to roll over, we could see this back down in the mid 250s. All of this is predicated on oil moving into the low 30s or more. Another stock that caught my eye the last couple of days is Cree. Now, it's been forming a nice base for a few months now, 6 months to be exact. And after it looked like it was going to break out here and here, it came down with the market. But it held the neckline or the support line near 23.5 and exploded off of that to get up near 28 today. So we need to get this to 29. Keep an eye on the resistance here. There is a declining tops line and lateral resistance here. We're now above the 3 moving averages. That's a positive. And if we get above 29, this stock can very well be 31 and 34, maybe even as high as 36 over the intermediate term. But looks to me like the long-term trend line on Cree and this space that's built right in here could be the beginning of an important move to the upside. We'll see. Cyber continues to be in the play as there's rumors of takeover here. This breakaway gap is held even with the market pullback, and you can see it had a nice stay today with another little pop of 232 or 5%, and it may very well get into that 53.45 range where there's some overhead resistance. Ultimately, I think it's a takeout in the mid-60s, something like that potentially. EGHT I put a swing on today because I just love the way the stock's been holding. I love the base patterns, the symmetry of it. There's strong run up from 7.25 to as high as 12.40 or so. So about 5 points here, and the pullback here, the 3-wave corrective, reversed to the upside again, and today gained a small amount, but it just was acting well. And so what I'm looking for is a move that takes this declining top line and lateral resistance around 11 3/4, 12, and runs it. Based on the measured move here to my next target, we got 15 coming up. I do want to point out that after hours earnings came out, the stock popped and is trading at around 11.75 by 11.95. And closing at 11.16, it's going to be up about 70-80 cents right on the opening tomorrow, and should make a run, maybe even a day trade for tomorrow. But for now, this is a new swing. It was a swing up earlier months ago, but I'm liking the way it looks, and it held up very well in a lousy market. And it's 4.3 for 7 days to cover. LABU, well, obviously the biotechs had a pullback day, and the LABU, which had come down dramatically of recent, well, first of all, 1, 2, 3, 4, 5 waves down, completing a major reversal yesterday. Now, after we got up to the day before's high around 10:30, today's high being 10:31, we got resistance right there. The pullback isn't unnormal. It's actually good to fortify the pattern. If you look at it on a 15-minute basis, you'll see what I mean. It looks more like a left shoulder, head, and right shoulder potential. What I want to see is if any further pullback tomorrow morning can hold around 8.5 3/4 and it start to move up again, then maybe this inverse head and shoulders takes hold and we get the stock to move towards the 11.5 and then 13 and 14 range. But first, let's take out this declining tops line, and that may take some doing. Looking very similar to the S&P and NDX, I might add, in terms of the down channels. NLS, well, this stock's been moving of late. Look at the pop in the last 3 sessions from 16 3/4 to 21.39. Right at resistance here. It did back off of that. My next target would be a test of 23, and then we're looking at 27. This is interesting. A really strong pattern for a lousy market with good unbalanced volume. Something to keep an eye on because of its relative strength. And speaking of relative strength, how about our PACB? even with the market pullback, it held to 50, and it bounced and retested yesterday, and today jumped 70 cents or 5.7% on nearly 2 million. This looks like a nice consolidation. It is a fifth wave consolidation. If you look at it this way, 1, 2, 3, 4, and 5. And sometimes they don't work as well, but when they do, they're powerful as well. My target has to be 17, 18 zone if it takes off. 7.5 days to cover. Well, there is an airline that's standing out here, and it's Spirit. SAVE with strong earnings broke its declining tops line. It's come from the mid-80s down to the low 30s, recovered and retested, and now it's broken back across the declining tops line and is right at this gap resistance right there. If we get any kind of follow-through, this could very well be in the low 50s pretty quickly. There's some resistance at the tops in that zone. Let's call it 52.3 range as my next target. And Trovina was a monster today. Looking at the 1 minute again just to see the beauty of the thing. It popped, it coiled, it broke out, it coiled again, and then stair-stepped its way up. Basically, it's 1, 2, 3, 4, and this is 1, 2, 3, 4, 5 waves within the fifth wave. Therefore, the end of the day today, I said to exit your day trade near this when it was up near 6. 560 after hours, by the way. And VHC, and this is acting very well in here, and take a look at, there's some pending litigation against Apple, which looks like it's going to go their way. And with resistance up here, should this get above the, let's call it 4 3/4 range, it could just fly to 7, 8. So stay tuned and watch this one. They had an inside day today on low volume with good OBV, something I'm watching. 16 days to cover, could get very interesting. Semiconductor Xilinx with strong earnings exploded today and is out in a resistance zone. And but with this breakaway gap on 11 million shares, if we do get above today's high, you want to watch 48.30. The targets are then 50.5, and then I'm looking at mid-50s. Lastly is XON, a stock that Roy Prasad likes a lot. I like the structure of the 1, 2, 3, 4, and a big fifth wave with 5 waves in a fifth, ending at the spike low with a big reversal, 2-day follow-through, got to resistance, backed off and retested, and bounced right back again, only to finish off the highs because of the declining top line and moving averages. But the structure is there for an important low in place, and my target's going to be 34 going forward. I need to get it to get going first, obviously, with a follow-through. I'm looking at about 32, 34, and eventually 38.9 if we do get a big recovery in biotech. Keep an eye on XON. And that's it for tonight, everybody. Let's have a good time tomorrow. Make some money.